Most people pick a stock app based on marketing hype, but the real difference is the fees, and those quietly drain your returns. Choosing an investing platform because it has a clean interface and promises free trading is dangerous. That surface-level simplicity usually hides aggressive back-end costs. As a European investor, you face a constant trade-off. You are either paying an upfront, transparent commission, or you are paying through a hidden foreign exchange spread every time you buy an international asset. This graph shows how costs eat capital. Left side, a €5 fee on a €200 investment is an instant 2.5% hit. Right side, FX drag. A hidden 0.5% fee compounds negatively, aggressively expanding the gap in your earnings. Today, we are mapping the top 6 investing apps in Europe directly to their mathematically optimal use cases for 2026. A great market year won't save a bad fee structure. If you ignore how your specific app charges you, you guarantee long-term underperformance. Let's start with platforms famous for zero upfront commissions. This matrix shows how eToro and Trading 212 operate. eToro targets beginners with a €0 trade fee. But look at the back end. They charge a massive foreign exchange fee of roughly 0.5%. If you are an EU investor buying US stocks over a multi-year horizon, that high FX fee guarantees significant capital loss. eToro justifies this cost with copy trading, letting you mirror other investors. You pay heavily for this social feature. Meanwhile, Trading 212 offers the same zero commission promise, but with a drastically lower FX fee and free ETF plans. For a user on a strict budget making consistent small purchases, Trading 212 results in an extremely low total yearly cost. The trade-off for that cheap structure is the platform itself. You sacrifice advanced analytical tools and traditional brokerage capabilities. Platforms offering zero upfront costs always extract their value somewhere else. They only work if your specific investing style perfectly dodges their hidden traps. Let's look at platforms built for investors who prefer consistent automation over active daily trading. Trade Republic uses a highly simplified model, a flat €1 fee per trade, regardless of the size. For users in Germany, paying that €1 buys peace of mind. The platform automatically calculates and pays your local capital gains taxes for you. But that fixed pricing becomes a massive liability if you change your behavior. If you execute a high volume of individual stock trades, those €1 charges stack up rapidly. This is where dollar cost averaging, or DCA, becomes relevant. This is the strategy of investing a fixed amount of money on a strict monthly schedule. Compare Trade Republic to Scalable Capital. Scalable offers a Prime Plus subscription model for €4.99 a month, which unlocks unlimited trading. Committing to a fixed monthly overhead requires math. The Prime Plus tier only protects your capital if your monthly trade volume is high enough that you'd otherwise spend more than €5 in individual fees. Fixed fees and subscriptions protect beginners from tax headaches, but they act as a heavy anchor on your returns if you trade in low volumes. Right now, let's address the optimal setup for advanced users moving larger sums of capital across international borders. Interactive Brokers provides direct routing access to over 150 global markets. This bar chart illustrates their critical performance metric. They offer the lowest foreign exchange cost in Europe, sitting at roughly 0.03%. The drawbacks are steep. The interface is highly complex, and they charge a minimum trade fee of €1.25. If you are a micro-investor buying €20 of a stock, that minimum fee severely penalizes you. Smartbroker Plus exists as a hybrid alternative. It combines lower fees with traditional banking features, paying 1.75% interest on idle cash. But it requires you to understand exchange routing. Smartbroker Plus users have to actively manage where their trades are sent because fees can swing from €0 to €4, depending entirely on which exchange you select. Advanced investors must willingly sacrifice a user-friendly design to access the institutional-grade fee structures required to protect a large global portfolio. Free trading is a myth. You always pay through flat fees, subscription costs, or hidden spreads. This decision tree maps out the final framework. Your primary behavior dictates exactly which app you should use. If you are an absolute beginner who prioritizes extreme simplicity and automatic local tax handling, use Trade Republic and accept the €1 flat fee for the peace of mind. If you are a long-term DCA investor focused purely on set-and-forget ETFs, choose Scalable Capital or Trading 212 to maximize your automated compounding. If you frequently invest large amounts in U.S. markets, choose Interactive Brokers. Endure the learning curve to secure those 0.03% FX fees. Selecting the wrong branch for your specific strategy results in hundreds of euros of unnecessary drag on your money every single year. Open your broker app, pull up your trade confirmation. If your FX fee exceeds 0.2%, you are paying too much.